Kathryn Rooney Vera. We've also got John Tamny, a Real Clear Markets editor. John, ended with you. I want to pick your brain a little bit on the market and how it factors into races. I mean, you could just as easily go back to an even 3 months. Forget about the exact day from Election Day. You could go back to the quarter. You could go back to any period and get different numbers. I grant you that. But that the market has been the president's friend, and this has been a heck of a time to see it start hiccuping. Will it make a difference? I mean, you know, we have better than 70 million people who've already voted. It's a moot point for them. What do you think?
Yeah, well, I think the market is always a look into the future, and I think it's more investors saying, assuming the incumbent wins, we would have more market-friendly policies. And so historically, markets rally on the assumption of a Republican winning the White House. They tend to downdrift when a Democrat is going to win, and then once the Democrat's in and normalcy comes back, they tend to rally a little bit after that once they see that the ability of the other party to do a lot of damage is maybe somewhat limited by divided government. So my sense with this is that markets were predicting a Trump victory. I think they still are. My speculation on this is we know how quickly nail-biting politicians can do damage to the global economy, and there's talk once again of lockdowns, these needless lockdowns that whereby you fight a virus with economic contraction. So my sense is that the correction is more about that and less about what's going to happen.
You know, Kathryn, the economic news has been generally pretty good. We had a dip in home sales activity, but that was off a record month, and it wasn't much of a dip. We had a surprising, show of improvement right now in jobless claims, now averaging 750,000. That's down markedly from where we were. And you have very good news on the GDP front, albeit coming after the worst quarter, the best quarter. So I'm wondering why it is the market has a tough time sort of digesting that and trading up on that. Is it the virus? Or is it these spikes in cases, the lockdowns that are beginning to take place in Europe right now? Some individual American cities looking at the same. What do you think?
I assume you're talking, Neil, about recent trading history. Since March 23rd, the market is still up over 50%, and tech is specifically up about 100% in Apple prices. But I think it's a combination, Neil, of as John correctly said, the prospect of further lockdowns, because lockdowns are what took us 30% lower in the second quarter of this year. Government mandated economic destruction, and that's in the third quarter, what took us the virtually equivalent percentage higher. So going forward, what we need to think about is what are the prospects of additional lockdowns under the potential next administration? And I think, Neil, I think John agrees with this, as I just listened to him say, is that the market is thinking that that's a higher probability if we do get a change in administration with the Biden administration. If we follow the path of, say, France, which yesterday just announced a national lockdown, then that would be absolutely devastating for our economy. And we know that the undesired consequences of this kind of manner of tackling the virus are massive, from physical, mental, emotional, structural unemployment, destruction of wealth perspective.
John, when you look at this and what's happening now, of course, October is always a freaky month for the markets. It's not the worst month, but it tends to be among the more volatile. I talked about today being the anniversary of the 1929 stock market crash. So do people look at October and just say, all right, let's get into November, put this behind us. We think the underlying trends, the spikes in cases notwithstanding, are still very good. They were not that way in 1929. You could make an argument that they were a little awkward in 1987. So this might be a little overdone. What are your views?